Hello, traders. I've got a stock that looks great right now, and I'll explain how I found it and why I like it. Subscribe to my channel now and turn on your notifications so that you don't miss any of these daily trades. You'll help me build my channel, and I'll help you build your account. Let's get started. We are 3 hours into trading. It is Wednesday, March 11th. Hello, traders. Market making a new all-time high. Very exciting. I suspected that we might see that on the heels of this $1.9 trillion stimulus bill. The big question that looms for me is this sugar high going to last? Meaning there's a lot of money sloshing around. We know that a very small percentage of the stimulus bill is actually going to go to unemployment benefits and to the stimulus checks. How is the rest of that money going to stimulate economic growth? We know that the number of new coronavirus cases is decreasing. States are reopening. I see that as the bigger catalyst right now. And it looks like there's going to be a decent economic rebound. A lot of analysts raising their expectations for what's going to be happening over the course of the next few months. So, a lot of optimism. My gosh, it's been a year that we've been trapped indoors practicing social distancing. I think everybody is a little relieved that there's some light at the end of the tunnel. So, part of this rally, I think, is also people just really feeling optimistic about the way that things are happening. Will this last a week, 2 weeks, a month from now? We won't know. So, I'm very guarded as far as this breakout to a new high. I want to see it be able to hold these gains, and I want to be able to see the market advance. Does that mean that I'm not participating? No, it doesn't mean that. I do have a few out of the money bullish put spreads on, but I've primarily been catching the moves on an intraday basis, day trading. That's how I prefer to do this. The reason for that is that I've been trapped in some bullish positions because I was looking for this stimulus breakout about a month ago. And I felt that we had a good chance to see a buying climax through the upper end of this trading channel. I got trapped in some bullish positions. I took some losses. I reduced my risk. I'm not sticking my head back in that noose. These long red candles were here for a reason. This was selling pressure, and I don't believe that these sellers are gone. I do believe that they're very passive into a $1.9 trillion stimulus bill, but now that it's been passed, I think that they'll be a little bit more aggressive. So let's see what happens. If the market's able to prove to me that it can close at a new high for a week and still have a little bit of follow through to it, then this will become our new support level, and I will gladly embrace it. But valuations are stretched. Stocks need time to grow into their current valuation. So I don't think that we're going to have a gangbuster, unbelievable economic rally in the course of the next month or two. I think this is going to take time to bear out, and I believe that there will be opportunities to buy. So don't panic. Don't feel that like this is the last big move, and my gosh, if I don't buy today, I'm going to miss everything. Market has a tendency to break out, and then it'll start to pull back and test that breakout. On that retest, that's when we have an opportunity to be more aggressive. If we take a look at tech stocks, actually, first, let's take a look at the stocks that I highlighted yesterday. Well, Walmart was my pick of the day. As I'd mentioned to you, I am day trading Walmart yesterday. The video came out 2 hours after the open. Stock was at about 130, call it 130.50 maybe. Look at that rally the entire day. Nice little bullish flag right there, downward sloping trend line. Ran all the way up to almost $133 yesterday. We made some excellent money on Walmart. Stock is taking a little bit of a breather today after a really nice run the previous day. If I look at where the stimulus bill is going to have the greatest impact, is going to be to middle income and lower income families. Where are they likely to spend that money? I think Walmart. Costco also has been nice. So I think some of the retailers will certainly benefit. So as far as the overall market right now, I love the breakout. I think everybody's feeling really good about where we're at with the market. Looking forward to that economic growth. So I think that we will stabilize in here. I'm not looking for any big drop on the downside. Here's what keeps pressure on tech stocks. It's the TLT. Traditionally, Tech stocks do not perform as well in a rising interest rate environment. And you can see how TLT has been down today. And if I go into the daily chart, you can see how this capitulation low right here never materialized into a capitulation low, because we would have seen a bounce and then we would have seen continued strength in bonds. We do have a 30-year bond auction today. The longer maturities have not been as popular. Let's see how that bond auction goes, but you can see that bonds are still selling off, and that puts upward pressure on interest rates. Will that upward pressure in interest rates keep the market from rallying? We'll see. But for sure, I think that's going to keep some pressure on tech stocks for a while. Let's take a look at the QQQ, see what it's doing today. Got this nice bounce off of the 100-day moving average. All of yesterday's gains were reversed. We did not see a long red candle like that for the SPY. Today, yes, tech is performing well. It's through this downward sloping trend line right here. I know that tech excites everyone because that was the first sector to really rebound from the lows last year. But right now, as I see it, I think there's some pretty heavy headwinds for tech stocks. So I don't feel that you have to pile in right now or you're going to miss the move. This is a good time to nibble. High right there is going to be support. Comes into play around the 100-day moving average. Bounced above it. I think that in a situation like this on QQQ, find your tech stocks that are above a major moving average like this. Sell your bullish put spreads down below that technical support and also below horizontal support. And I think that you'll have a nice trade. I'm not all gushy about Microsoft, but just, this is one of the tech giants. You've got a nice horizontal breakout there. 1, 2, 3. Now it's support there. It's bounced off of it above the 100-day moving average. I think that this is the type of situation where you can sell an out of the money bullish put spread here. If I look at one of my favorite tech stocks, Google held up better than almost any other tech stock, and you can see that support right here around the $2,000 level. So yes, if you can sell a 1990 bullish put spread, I believe the strike prices are about 10 points apart. You'd have to get a $2 credit for that. Yes, I think that Google looks good. It has been able to compress while there's been a tech bloodbath. So you can see how well it was able to hold that gap right there. These are the types of opportunities in tech that I think you can be looking for. So as far as the market today, I believe that we're going to continue to float higher. There are a couple of patterns that I would look for. This compression, this is a gap and go formation. You can see how the market gapped up today and then it went. There's your 1OP cross early in the day. That was a beautiful cross. Now you get a bearish cross right in here. On a strong trend day like this, you will get a bearish cross, and this is what we call a bullish divergence. With the indicator going down, 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 you would expect the market to be going down, down, down. When it doesn't, and we may be getting a bullish cross here, the next bullish cross is going to fuel a rally through this upward resistance. So there's a couple of different scenarios that I could see playing out today. One is where the market compresses. In both scenarios, I believe the market is going to compress for a while. The most likely scenario is that late in the day, probably with an hour and a half left in trading, you test the lower end of this compression, which is about 394.50 on the SPY, and you break below it briefly, and then you get a long green candle closing on its high. That little breakdown attracted some short sellers thinking that the market was going to retrace late in the day. Not so fast. You get that long green candle, and that short covering is what fuels a nice closing rally. That is what I believe the most likely scenario is. Now, if you do get that breakdown below the compression and you see 1, 2, 3 red candles in a row that have some pretty decent length to them, then we're going to get this type of pattern right here. Let me go back to a couple days ago when we had a really nice big market breakout, and then we compressed for about 3 hours. There's your gap and go, and now we compress, and there's the other type of pattern that you will see. And there's your bearish cross, and you'll see these red candles starting to stack up. And then, yes, if you stay below this compression without that long green candle, then you're going to drift lower. Either of those two scenarios is likely. On a longer term basis, I think that the market is going to continue to try and move higher. I think that the headwinds are going to be relatively stiff, so look for it to gradually float higher for the next few days. As we get into next week, then the stimulus bill is going to start wearing off. All that excitement is going to start wearing off a little bit. And once we're through it, that's when I think we're able to really gauge what the market's going to do longer term. So let's take a look at a stock that I like today, MGM. I'm going to go right into my favorite swing trading, my bullish swing trading searches, and that is Pop Bull. You can see downward sloping trend line here. Bullish flag formation. There's your flagpole. There's your pullback. Long green candle closing on its high through horizontal resistance. Would I go out and buy MGM? I think you could. I would still prefer to sell an out of the money bullish put spread, and I would be keying off of this $37 price point. So I would be selling the $37 put, buying the $35 put, and doing that for a 40-cent credit. You'd probably need to go out into the April expirations to be able to get that kind of credit. I'd like to do that ideally with 3 weeks or less until expiration. As far as bullish flags are concerned, my own personal preference is you get this nice long big flagpole, and then you get a pullback or a compression, but you don't get a huge drop off. The reason I don't like that big drop off is because that tells me that there's a lot of selling pressure. When you get more of a compression and a very shallow dip, that tells me that buyers are still engaged. And as soon as the market starts to recover a little bit, whoosh, it's off to the races. MGM obviously is going to benefit from the economy opening back up again and casinos opening back up again. So I like MGM. I think it sets up well for a bullish put spread. I would use a little bit of caution as far as going out and doing a lot of overnight swing trading. Let's see what the market does from here. Yes, we have a new all-time high. I don't think that this is your last opportunity to get long. I think that there has been selling pressure so far this year. Every time the market rallies and gets a little bit ahead of itself, whap. Then we start to float back up. Market gets a little ahead of itself, whap. So I am not expecting that we are off to the races, never to look back. I think we're going to have plenty of pullbacks, perhaps even testing this breakout that will provide us with excellent opportunities to get long. That's all I've got for you today. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.